All right, everybody, coming at you with a market update a little bit late in March, coming at you live from March break. I hope everybody's doing well with their families. I do have a green screen behind me, so if we can, jump into 2024 and figure out how to put a background behind me, we will. If not, this will be a little bit of a strange video with a green screen. So my apologies if it looks a little odd. Going over February and the beginning of the year, prices were relatively stable compared to last year. We did see sales reach 839 units, which is a little bit of a modest gain from last year. And we did see an increase in inventory as well. And the unadjusted benchmark price, and we've talked about benchmark price versus average sales price and what that means. And benchmark is, an average house in an average neighborhood. We're not going to include, the outlier that sells for way above average for the neighborhood, or the houses that sell way below. But take into consideration square footage, average finishings, we get a benchmark price of 835,000. So still quite high and still well above 2019 levels. So I thought it would be interesting. I'm sure that you're all feeling this too, that the market is picking up. We do see fixed rates through the broker channel below 5%, which always does increase inventory. Not inventory, which always does increase activity. People like to see something with a 4 in front of it rather than a 5. It does tend to increase consumer confidence. And in that entry level price point in Hamilton, kind of the, this is going to sound crazy, 600 to 750,000. Activity is very, very hot. We are seeing multiple offers. So why is that? I'm a big believer in incentives drive all human behavior, and it's very, very clear that we have a finite and declining amount of entry-level housing. No one is building entry-level houses in mid-size and large Canadian cities, which is generally where people want to live. So it's no surprise that when these homes become available, that there is quite a lot of activity. And what we're seeing is that the floor is being raised. In 2017, when the stress test was introduced, kind of that entry-level price point in Hamilton was about 400,000 for a reasonable home. That price point vanished by the end of that year. Then it was 500,000, and now we're kind of getting up to 600,000. So that floor is being raised on these products because when people are getting into them, they're finding that they actually cannot make the leap if they've purchased within the last 5 years, which is further throttling inventory. So if you bought your first home for 500,000, put 5% down 3 to 5 years ago, you still have a relatively high mortgage. Let's call it 400,000. And if your sales price on that home is in the $700,000 range, you're taking out $300,000 of equity, moving costs. A good figure for people to keep in mind. It costs $50,000 to move, land transfer tax, real estate fees, lawyers' fees, all that other good stuff, moving costs. You have about $250,000 to play with, but we're finding that the upgrade home for folks is generally over $900,000 still. So what that means is you need to be able to qualify for a $700,000, $800,000 mortgage. We know that rates are still very high, so that is a huge monthly payment between $5,000 and $6,000. So obviously that absorbs typically one member's entire income, so 50%. So this is kind of why we're seeing those entry-level prices come up, while the top price is staying stubbornly high. Now, we've also seen months of inventory drop. All those deals for those homes that have been sitting for a long time are getting gobbled up, and typically the places that are still sitting are either still very, very overpriced or they require just far too much work from a standpoint. So when we go back and take a look at months of inventory, now when we go back to March 2023, we saw 1.5 months of inventory with an $845,000 average sales price. We're talking about average now, not benchmark. So, full-on seller's market, March 2023. 845,000. Leap ahead a year to February 2024. I'm curious to see which March data is going to be like. We have 2.3 months of inventory, an average sales price of 842,000. So basically no change in average sales price, but 1 month more of inventory. So we're still below that 3 months of inventory in a technical seller's market. So it feels like there's more homes available, but there's still nowhere near enough to satisfy the demand. And what we're hearing from our clients, what we're seeing in the marketplace is that sellers have said, hey, you know what? We ain't dropping our prices anymore. We're kind of where we're comfortable, where we need to be. And buyers are saying, okay, we're seeing some signs of life in the Canadian economy. We understand that we need a house. So people are highly, highly incentivized to act now because they're seeing stress test didn't kill the real estate market. Interest rate increases didn't kill the real estate market. these assets that are irreplaceable. Remember, interest rates don't cause houses to appear out of thin air. We need people to build them. And in a high interest rate environment, it's very difficult to build houses. Labor costs are high, material costs are high, interest payments are high, paying HST on everything, taxes are high, development fees are high. So the cost of construction is still very, very high, which is why these assets that already exist are so valuable. People are saying, you know what? We missed out on the $400,000 entry point. We missed out on the $500,000 entry point. We better go now. Yeah, it's a little more than we want to spend, but we are going to act and we are going to get in now because we believe that in the long term, these homes will be worth more. And until there is a massive, massive building boom of what people actually want to live in, these assets will continue to increase in value. So what does this mean? Okay, so for buyers, obviously, if you're thinking about buying, you've saved up some down payment, talk to a mortgage professional, figure out where you're at in terms of purchasing power and start looking. Team up with an agent who knows the market extremely well. They can help guide you towards opportunities if you're going to be in that highly competitive entry-level price point. So everything in the marketplace is like from say $550,000 to $800,000 is red, scorching hot. However, you still have to price your house well. It still has to be presented well if you're a seller, and it still has to be marketed well. If you're a seller in that price point and you're not getting any action, you're probably overpriced, or the market is saying, sorry, it's not appealing at that price point. So if I was considering doing a sell and a buy right now, I would be looking at homes over $800,000 that have been on the market for more than 30 days. There are some out there, and kind of taking a look. Maybe the pictures aren't very good. Maybe it's not super duper clean. Maybe there wasn't staging. Maybe it's old furniture. It's an elderly couple. But go take a look at those homes, and don't be afraid to go slightly outside of your market if you need to do an upgrade. A lot of folks are saying, hey, you know what? We've seen prices come down a lot further in the surrounding area of Hamilton than in Hamilton proper. Maybe we're going to be open to Brant County, to Niagara, to Norfolk County, to Brantford, to get that extra square footage, maybe a little bit of a larger house. And we've actually benefited a little bit from appreciation. Our housing costs have stabilized, our mortgage costs have stabilized. We can make that move, and it's not too painful. So as always, if you want to talk about your unique situation, please feel free to reach out. We're talking with a lot of folks who are concerned about their mortgage renewal this year. Obviously, this is a big thing. We are at the tip of the iceberg of this as renewals are coming to, especially in the pre-construction market where people are having to close on homes that are worth significantly less than they purchased them for in 2019. It is ugly out there. For that, we feel for those folks for sure. But if you're concerned about your mortgage renewal, make sure that you reach out. At least you have an idea of what your home could sell for in this market. You can try to increase the value of it over the next couple months and hopefully come in. And I do think we're going to see a lot of inventory after March break. Anecdotally, we have quite a few listings coming out after March break. A lot of my colleagues and other real estate professionals are saying, hey, you know what? We got stuff coming out after March break. So hopefully there's some more choice for buyers. And it seems that the long-term 5% interest rate is doing its job. Things are coming down. The froth of free money, that hangover of just taking on all that leverage is finally starting to wane. So hopefully we don't have any new egregious rampant spending measures from all levels of government driving up the cost of everything again. And we can get out of this mess together. Anyway, you know where to reach me: Stone Tablet, Carrier Pigeon, email. If this is a green screen, apologies that it's weird. If it's a really cool background, thank you for watching this long, and we'll see you on the next one. Bye for now.